Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, March 28th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. A very narrow range heading into the RTH Open today, just like yesterday. 32% of average range, 26.75 points right now. This market's been averaging 83 points per day on a 10-day basis, but things are quieting down here, especially since Fed Day last Wednesday. You can see how compressed it's gotten since then. Very clear resistance on the highs. Higher lows coming into play like this, so you're getting this compression of price action right now. And sooner than later here, we'll start to see expansion from this range. But right now, in a compression, narrow range, almost inside day, barely ticked below the previous session's low. But right now, for the most part, this market is trading right around year-to-date VWAP, which is value. This line right there, that cyan dotted line, is VWAP for the year, and it has gone super flat here. So this thing is happily trading around value. It's chopping precisely around 4,000, and it is happily trading in this zone as of right now. No real potential expansion opportunity just yet. Later on in the week, we'll have economic data that comes out that could trigger an expansive move here. But again, based off how this thing rejected the previous quarter's high, based on how it's rejected the previous month's midpoint, we're still in a down move or down trend here with a shot at coming down and retesting that 38.50 level. Heading into next quarter, we do have some very good quarterly levels, and we could be looking at some fade of the edges of those quarterly levels. So again, some new quarterly pivots coming up here next week. If we take a look here at the NQ, very similar price action, narrow range heading into the RTH Open. This is 28% of average range, just 82 points of range. It's been averaging 290 per day. It's also a narrow 5, 6, 7, 8 day range here, as it has just kind of held after the creation of the FOMC key level last Wednesday. So Wednesday the 22nd, got the Fed level there, and then you see just sideways action around it. So we haven't seen that move away from the level that we're accustomed to seeing. For example, here's the FOMC from February 1st. The level prints, and you get a big push away from it. You see rejection. Eventually, you come back to it. Right now, we haven't gotten that first initial move just yet. Still building out. Compression here on a multiple day basis, compression on a 1 day basis. That's a lot of potential chop here. So just like the ES, you kind of want to avoid the chop right now. Look to fade the edges, fade new highs, fade new lows right now until proven otherwise, or stand aside as this thing kind of builds energy for that next move. If we take a look here at crude oil, crude oil right now has been super bullish the previous day with a massive squeeze and potential transition day. This transition day, as we mentioned, if price can get away from 70, the previous year's low, but more importantly, if it can break through 72, you start to push back into the market distribution range from above. So to push through as it did here, very, very important. It got away from 70. It pushed through the 72 pivot and a back above the bottom of this range. Any pullback now needs to be defended for a continuation that can take you back to 80.5 and perhaps as high as the 82.66s. So this next pullback is going to be very important. After such a huge squeeze the previous session, you're likely going to see digestive price action today, a little bit of a pullback at some point. You'd like to see bulls defend and maybe get this thing going up a bit. But right now, this could be a digestive day. Tomorrow could be perhaps a failed new low and go, similar to this. And we could be looking at a continuation that takes us to 80.5 over the course of the next several weeks. Additionally, we are entering a seasonality pattern here where things get pretty bullish from now into 4th of July. So seasonally speaking, over the last 5 and 10 year splits, we've had a push higher into the 4th of July. So the next pullback could be significant. Can price hold 70 on the next pullback? First shot at 80.5. That could be the next 10 handles up. If we take a look here at gold futures, gold right now backing off of the 2,000 level. As we talked about before, 2,000 has been a very, very strong level of resistance for this market. Any price above that has been heavily rejected. Sometimes price can get through it, then it drops back below 2,000, rejection at 2,000 last year, and that led us to the lows of the year. We've now come all the way back to those points, but again, this is very few and far between do we find acceptance through 2,000. That's why that 1960 level is so important as well. 1960, once it fails to hold 1960, there tends to be a rotation back toward 1800, and in some cases back towards 1640. So 1960 is still the key level to watch. Obviously 2000 showing some signs of rejection. We're still in an up move, in a short-term uptrend, but after a lower high failure here, we'll see how price behaves around 1960. A failure of 1960 opens up a rotation back down. If it can continue to manage to hold on to that level, maybe this thing can get that final squeeze toward 2075. Lastly, taking a look at the YM. The YM is trading a range of just 33% of average, almost exactly 1/3 here, exactly 1/3 of average range. 626 points of range is the average on a 10-day basis. Right now we're at 207. Almost an inside day, barely rejecting the at the previous session's high, lower high at that level, pushing back to the day's midpoint. So a good fade here as this thing compresses toward the apex of this pattern. 33K continues to be a clear level of resistance for the YM here, with a downward bias as well. So you can see this downward trend right now, this downward trending channel, this price action compressing here. At some point you would expect perhaps another primary move down, similar to this move or this move here. So again, keeping an eye on this level. We haven't really seen much movement away from the FOMC key level. This buildup right here could be the buildup that triggers the next key move away from that level, likely to the downside. But if this thing can find acceptance through 33K, kind of like that crude oil transition day, you could open up a move back toward 34.5 in the best case scenario. So this key level right there will be very important. That pivot, if it can push through, it can open up some upside. But until then, things are still likely focused to the downside. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.